The U.S. dollar is lower versus the three major currency pairs, but only by a little. Talking about the euro versus U.S. dollar, the dollar versus yen, and sterling versus U.S. dollar. The Reserve Bank of Australia did cut rates by 25 basis points, but they did signal that they talked about cutting rates by 50 basis points. That's in the Aussie versus U.S. dollar to the downside. I'll talk about these currency pairs in this video, so let's get started. I should say I'll talk about these currency pairs from a tactical perspective in this video, so let's get started. And I'll start by taking a look at the euro versus US dollar on the hourly chart. And trading yesterday, the price extended above this floor area. You can see the floor area being formed right through here. Lots of different lows coming in there, bouncing. Then we fell below the floor through here. And although the price moved above it right here and right here, in trading yesterday, the momentum faded quickly on each of those attempts, and the price rotated back to the downside. So we're back below the old floor now ceiling, and lo and behold, the high price in trading here today moved up to the high of that ceiling at between 1.1265 and 1.1275. Found willing sellers and pushed further back down near the closing level from yesterday. So not much change in the euro versus US dollar to start the new trading day. We did move down to earlier in the Asian session down to test the 200-hour moving average, and that's right near the 100-hour moving average now, also near this area right through here, which goes back in time back through here as well. So this 100 200-hour moving average will be the key barometers on the downside. If we do break below those levels, it should open the door for further downside momentum in this pair. Ultimately, we would need to get down toward the 38.2% retracement to prove that the sellers are more in control. That's if we can get below the 100 and 200-hour moving average. Alternatively, if we can't, then the upside breaking above this old floor now ceiling would take the price up toward this trend line up through here, which comes in a little bit below the 1.1345 level in trading here today. Let's take a look at the dollar versus yen next. We'll take a look at the hourly chart as well for this currency pair and trading yesterday. We gapped lower off of the weekend news about the Moody's downgrade. We came down to test the 100-bar moving average on the 4-hour chart a number of different times through here. Finally, we broke below that level, and that gave the sellers a go-ahead to push to the downside. That move to the downside did get below the 200-bar moving average on the 4-hour chart right through here. That should have sent the price lower, and it did, at least initially, but then snapped back higher. Now we're in between the 100 and 200-hour moving average. It says the market is a little bit unsure, heading down below those levels, and we'll take a little time to figure out which way we want to go from here. Do we head back above the 100-bar moving average, or do we keep the trend that we've seen over the last week and a day or two to the downside, and start to look toward this swing area between 143.57 and 143.95. That would be the next key target to get to and through on the downside to push the price lower toward this swing area down through here. Alternatively, if we do break back above the 100-bar moving average on the disappointment below the 200-bar moving average, we could see the price move back toward our 100-hour moving average. Remember, was last week that the market fell below that level and had one last gasp to the upside before moving lower and finding willing sellers against the 100-hour moving average right through here and push downside. Now the moving average is lower, making it an easy hurdle to get to and through, but that would be the target on a break above the 100-bar moving average on the 4-hour chart. So buyers and sellers are more happy right now in a neutral area for the dollar versus yen. We'll see which way the next show is coming. Finally, not finally, because I'm going to take a look at the Aussie versus US dollar, but the sterling versus US dollar made an attempt to get above this swing area. You might even want to put a horizontal line in this pair right about there. As you can see, the high price that we saw in trading yesterday came up toward the high price that we saw back here and found willing sellers. In trading here today, the price has tried to stretch up toward that level once again, but could not do it again and rotated back to the downside. We have support, looks like near the New York session low yesterday and the Asian session low in trading here today, near the 1.3345 level. Right below that level opens the door for a rotation down toward the 100 and 200-hour moving average. That's the blue and green line in this chart. But above those moving averages, the bias remains more to the upside. The problem is, we can't push higher for this pair. On the top side, we do have resistance up here at 1.3423. 1.3441 on the top side was the highest price in 2025. and in between comes in 1.3423. That level, 1.3423, was the highest level going back to 2024. That's at this level right here. So there's a reason why the market traded above and below that level right through here. We tried to break above it, couldn't do it, and then fell back below it, and found willing sellers against the old high for 2025. You get it. Okay, finally, let's take a look at the Aussie versus US dollar on the hourly chart. This is actually the biggest move of the day, with a decline of minus 0.7% versus the US dollar. The price action has shifted from above the 200-day moving average going into that rate decision to actually the rate decision was right here. So the price did sell off from that 200-day moving average, and then we broke below the 100 and 200-hour moving averages. That's a balloon green line in this chart. Ultimately, however, the price still remains within this red box, which is a confined trading range going all the way back here to mid-April with lots of ups and downs. We're more in the upper extreme, but now with the price moving below the 100 and 200-hour moving average, I should say we're back in the lower extreme of this trading range. So as long as the price remains below that level, the bias remains more to the downside for this pair, with this trend line perhaps as a next key target. Get below that level, we start to look toward the 200-bar moving average on the 4-hour chart, and then the low swing area down here between 0.6321 and 0.6343. So there you have it, a look at 4 currency pairs this morning to kickstart your day. My name is Greg McGlosky. Good fortune to trading. Bye-bye now.